higher credit score borrowers are going to get worse terms than lower credit score borrowers? Did I get that right? We're going to talk about all that news and everything around this new federal rule next. Hey there, my name is Ryan Skaggs, and this is the Mortgage Minute. This channel is dedicated to everything mortgage, real estate, and interest rates. And today we are going to focus on what the heck is going on with all these headlines when it comes to interest rates and this new federal rule, law, whatever you want to call it, right? So let's start at the basics. Who put this rule in place? I will call it a federal rule because it's a policy change for Fannie Mae and Freddie Mac. Now, who looks over Fannie Mae and Freddie Mac? That is the FHFA. That is the governing body, government entity, basically telling Fannie and Mae and Freddie Mac what to do and how to do it, right? So they actually put this in place and announced it back in October, but it's for loans that are delivered after May 1st. So now here we are. End of April, rates have been climbing. The average 30-year fix is now in the mid sixes, I believe 6.48. You can check out the link below in my description to check out the weekly survey for Freddie Mac. While you're down there, I'd be forever grateful. Hit that like button, hit that subscribe, and click that bell icon to be notified as I'm putting out weekly videos on the channel. Now, let's get back into it. So, you've probably seen some headlines. Maybe you've heard about it, maybe you haven't. So the FHFA has now put this in place for now loans that are delivered. It now takes place as of May 1. And why are they possibly doing this, right? I'd love to know what you think is why. And then a little bit later on when we cover some more details, I want to hear what your opinion is based on how I share this and I'm going to give you my full opinion. But the average purchase price of a home is over $420,000 across the country. So therefore, they're trying to put things in place to have homes more affordable or to reduce monthly costs and or closing costs. So that's what the FHFA is tasked to do. And these are why these policy changes are happening. Now, as I can tell you, is a lower credit score borrower is potentially going to have a bit of a break in terms of fees or rate. So I'm not going to get into what LLPA means and all these other things, but just kind of generally summarize what's happening. Higher credit score borrowers with 15, 20, 25% down payment are now have a slightly higher cost basis delivering these loans to Fannie Mae and Freddie Mac. Now, I have not said all loans. Again, FHA, VA, USDA, jumbo loans, all these other loan products, portfolio loans, these are totally separate. But Fannie Mae and Freddie Mac have such a huge, basically capital market where, loan officers like myself and mortgage companies can sell those loans back to Fannie Mae, Freddie Mac, get our money back, and then go do it again, right? So it is a very big deal, and it is a majority of the loans that individual loan officers like myself are doing every day is Fannie Mae and Freddie Mac. Now, higher credit score borrowers will still have a better rate, but it's not as much of a difference. There's not as much of a dispersion between, say, a higher credit score borrower and a lower credit score borrower. So that is a break, per se, for that lower credit score borrower. Now, I do want to kind of say that it still matters that you have a higher credit score. It just matters less. So I'd love to know what you think about that. Put your comments below. Like, do you think this is a good idea to spur home affordability? Again, I'm going to give you my opinion next, so hopefully you've commented already before I have moved your opinion. I do not believe, and here's my opinion of what I think this new policy is going to look like, is that it doesn't appear that it's not necessarily higher credit scores are subsidizing. It's just that they're getting a break, right? Lower credit score borrowers are potentially getting a break. Say a 680 credit score with a 5% down payment. Now it gets a little bit more of a break. Do I think this is going to work? No. No, no, and no. I've been doing this for over 10 years. If you've got a 660 credit score, 670, 680, maybe even 690 credit score, likely, now you have to apply to get credit qualified and see what you'd be able to get. Likely, an FHA loan will have better terms on the short term for borrowers in this scenario. So if they're going to FHA, then we are de-incentivizing these higher credit score borrowers with slightly higher rates and fees to we're not going to get these other loans. We're just not going to see them. It's going to be a smaller and smaller percentage. Yes, it might cost a little bit less, but again, if FHA still has better terms, right? And mortgage insurance providers, here's something, you got less than 20% down, you're going to have mortgage insurance. They haven't changed their fee structure. It's still going to be expensive. You got a 670 credit score, mortgage insurance is going to be expensive. You go over to FHA, which just had a recent update, and I will link the video above here. They had a recent update to reduce their mortgage insurance, which I thought was great, but we're just not going to see as many. It just seems like a lot of policies. No matter what industry you're in, if you look at a larger company, maybe even some smaller companies, sometimes policymakers are making these decisions without really getting into the nuts and bolts of what happens every day in my world, let's say, right? In a mortgage loan officer and what we see in terms of applications coming through and borrowers coming through. So it'll be interesting to see. Put those comments below. I want to start a discussion. Love to hear from you. Please, 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 if you haven't, click that subscribe button. I'd be forever grateful. Stay safe, and we'll see each other again very, very soon.